Hello, everyone. My name is Brooke Hart, president here at Presilium Private Wealth, and today I wanted to talk to you about the potential impact of interest rate changes on your lump sum pension value. This is something many of you are going through right now. You spent your whole career working to save up for retirement, and your company has been generous enough to be one of the few companies who still offers a pension. Over the last 2 years, with rates bottomed out in reaction to the coronavirus crisis, you've probably even seen this pension figure rise to new heights, which has you thinking more and more about retirement. Now, with rates going up and going up quickly, you're probably seeing a number of your close friends and colleagues retire seemingly out of the blue, and you're beginning to wonder if you're missing the boat. While interest rates and pension values are inversely correlated, the decision to retire or not, simply to collect a higher pension benefit, is not as cut and dry as it may seem, especially if your target retirement date was beyond 2022. Yes, by leaving your current company, you may avoid seeing a 5 to 10% drop in the value of your pension. However, as an example, if your financial plan was built around you retiring at age 62 and you're only 59 or 60, you are now beginning to draw down on your assets 2 to 3 years earlier than you had planned. This is compounded by the fact that if you had continued to work, your retirement assets would have had the power of time on their side, providing the potential to have 2 or 3 additional years of significant growth heading into retirement. Furthermore, you forego the additional years of a consistent paycheck, any cash and long-term incentive bonuses, along with the contributions into your 401k and the company match, all of which could end up far exceeding the trade-off of avoiding a slightly smaller pension payout. And lastly, and perhaps the most important part of this decision, is that it is your decision. While you and your colleagues at work may discuss everything ranging from family updates to stocks you like, investments you're considering, and everything in between, their situation is not your situation. Rarely do you ever confide so completely in a coworker or they in you that they can give you accurate advice pertinent to your situation. Too often we get caught up in the water cooler talk and we allow someone who may be in a totally different situation or maybe more or less reliant on their pension to make us uneasy and cause us to rush into a hasty decision. Ultimately, we should never make decisions based upon incomplete information. And the only scenario in which we have all the information necessary to make that informed decision is our own. So before making any permanent decisions about your future, lay out the pros and cons, model out the various outcomes and scenarios and the impact of pulling from retirement assets sooner than anticipated, and get together with someone whom you trust and who does have a full understanding of your entire picture to review this before making any final judgments. Thanks everyone for joining us.